Hi, folks. This is Lee Gettess with the Market Sense for the week of August 13th, 2013. The charts we look at come from the Trade Navigator software. And we're looking at a weekly bond market here where bonds have kind of surprised me so far this week. After this big hard breakdown, they've gone sideways for a little while here. And this week, after this little inside week last week, they started up, and I thought they would probably break out above this 135.08 area here and head up to the mid-Keltner channel near 138. Instead, they failed just over 135 and have dropped precipitously in just 2 days. This support here at 132.22, they're actually just slightly below, although they might be able to recover that. But it's a lot more weakness than I expected to see there. I don't know if they're worried about Fed tapering or what their real focus is. But I will say that despite all that weakness, we still have nothing but this long-term, it's about 7 weeks worth of sideways pattern here. So this hasn't done any damage yet. If they go down and test this low, I really don't think they'll hold it. I think they'll break down, and who knows where they'll go from there. And I still think that there is a chance that this is all just a sideways pattern and they will resolve it and come up here and trade the mid-Keltner channel, although maybe not this week. But we do have a lot of things coming up this week. The PPI on Wednesday and then CPI and industrial production on Thursday. There's plenty of reports that could provide a catalyst to drive them in either direction, but to save them and kick them back up perhaps. But the weakness is concerning. I mean, it makes the downside appear a lot more likely than I thought as of the end of last week anyway. Now in stocks, we have now going into the fifth week of a really tight little sideways pattern here on the weekly. That's not a lot of volatility there at all. And going sideways at the high like that, it could mean distribution. It could mean they've run out of gas and they're ready to roll over. It also could mean they're just basing and working off an overbought condition by going sideways and they want to start another leg up. We're kind of looking at 1705 on the upside and 1675 on the downside. They seem to just want to stay between there. So unless they break out of one side or the other of that with some authority, it's really hard to see that they want to do anything at all. I actually think maybe 1715 and 1665 are maybe better areas, give a 10-point cushion, because they could certainly make a marginal new high or low and not mean anything. But I think breakouts are the way to look here. They're not going to stay this tight sideways for long, and I'm not sure the direction is really clear. So just going with them when they go is probably the smartest way to handle this market. So that's what we've got for you today. I hope you can find something profitable to get yourself into. Thanks for checking in to see how we're looking at things.